Hi everyone, this is Paul Lang from DTS, and I want to introduce you to what you're about to watch. This is an hour-long event that was presented live to the free members at Discipline Trading Strategies. This event was called From Algos to AI and How It Affects Us. I'm going to discuss, this is probably one of the most anticipated presentations I've ever done. A lot of questions ahead of time, a lot of people looking forward to it. This, of course, talks about from algorithms to artificial intelligence. Takes you on a little history of where trading has gone from the beginning, how these things may affect us today or how they don't, and how you can or cannot utilize them. I think this is a phenomenal event, but of course, that's my own personal opinion. If you enjoy this event, check out the many other educational events, articles, and Trade of the Week videos you can get access to on the DTS Free Stuff page. Anyone can access that. I believe that is the greatest source of free information, free useful information anywhere on the internet. So for now, sit back and enjoy From Algos to Artificial Intelligence. 3, 2, 1. Good evening. Good evening, everybody. Sound check. How's everybody doing out there? It's 5 o'clock on the East Coast of the United States. May 7th in the year 2025. Hi, John. Welcome back. Tim. Any new people out there? Hey, if you're new, do me a favor when you get bored. Send me an email sometime. Just, what are you doing here if you're brand new? How do you like today? How'd you get here? I'm Paul at disciplinetradingstrategies.com. I don't have it here to copy because when I do a presentation, I fold everything up. But you can figure out how to spell disciplinetradingstrategies.com. It's going to be on all the slides you're about to see. We all set for tonight? I don't know why. I seem to have had more enthusiasm about this than the average thing. I don't know why. Hey, Myron. And I did it again, man. I just overdid this so bad. Yeah, we'll see how great of a topic it is. Everybody seems to think it's a great topic. We'll see. I'm going to run through it in painful detail, and at the end, I'm going to ask some challenges of you. So let's begin. As I said, I just kind of really overdid it again, so I hope we're not going to run late. Well, the beginning part of it will go pretty quick, I guess. So maybe it'll go really fast. I don't know. I'm expecting some discussion along the way, so we will see. From algos to AI. Now, algos is short for algorithmic trading. AI is artificial intelligence. Unless you've been sleeping in a cave in southern Oshkosh somewhere, you probably know all those terms. In the last 40 years, markets have gone from phone broker, blah, 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 blah. We don't need to read that. That's the intro slide. I'm going to cover all this stuff. That's the email introduction you got, discussion points. Let's continue on. Prehistoric advances. You like that term? Prehistoric advances. What was the first technological advancement that really changed how stocks are traded? Question for you guys. There may be a big prize to the person who gets this right. There may be. I'm not saying there is, but there may be. First, technological advancement literally changed how stocks are traded. A window? I don't even know what papyrus is. A room full of comedians. Nobody got it, huh? Fire, telephone, no. Telephone, you're way late. Nobody got it right. And see, there was going to be a huge prize if somebody got this right. Possibly a new Tesla. The telegraph in 1832. The telegraph was the first big change to the stock market. I'm serious. Because before that, it was the equivalent of the open outcry system. Stocks started trading in 1602. Did you know that? In Amsterdam, the world's first stock exchange building. I think that's an artist rendition. I don't think there was really. Did you get that right? I didn't see telegraph up there. I thought I saw telephone. Something else really amazing. Did you know that the telegraph? Myron, very good, man. You weren't you weren't around for all that, were you? And here's a quick little blurb about it. First major advancement. Blah, 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 Sam Morse. Well, I guess that's where we got Morse code from. I never knew that. 1856, Western Union took over. Blah, blah, blah. First chance for people to actually kind of, get an order to the marketplace. But you'd have to know exactly what he or she wanted to buy or sell prior to making the transaction, the cost, because in other words, a one-way communication. So you had to be precise. So it wasn't really a terribly effective way to do things. Then came the ticker. Nice job, Myron. Boy. I wish I was having a prize for the second question because you would have won that one for sure. The ticker, you may not know who invented the ticker, but who perfected the ticker and resold it? It was invented by Callahan. Who perfected the ticker and sold it for Back then, $1 bazillion. Yeah, man, Myron, holy, what are you? Are you like a stock history teacher or something? Thomas Edison, you're absolutely right. Did I leak a copy of this to you or something? Yeah, invented by E.A. Callahan and perfected by Thomas Edison. You know, personally. Oh, that's too fast to Google. I mean, that was pretty quick. I don't know unless he anticipated all of this. Laws invented, quotation device, blah blah blah. 50 years, just 1 year later, Callahan improved the gold quote machine, became a ticker, sold at $25 a month. Edison perfected it, sold it for 40,000. Not bad. Ticker, and at 40,000 back then, that's probably like, I don't know, $65 trillion today. I don't know what it's worth. Ticker became the single best obstacle. The ticker overcame the single best obstacle of transmission, which is a geographical barrier. So now people knew the cost of the stocks before they placed an order. Wow. And then, of course, a light bulb moment. Good one, Roy. See, you have classy humor, like John, who's in the room here. He just is slapstick humor. You're good. Then this one really changed everything, and you guys know what this one's going to do. It's going to be the telephone. 1878, that reminds me of Mayberry. 1878, telephone came on the scene. And of course, this was the first opportunity to really, really change things for the market. Huge importance, contribute to the growth of the interest in the market, blah, blah, blah. However, provide convenience to brokerage firms on Wall Street. It was significant. There were 88,000 telephones in service in the Wall Street district in 1920. Probably more than there were in the rest of the United States all put together. Amazing. And then, of course, we know the next one after this, right? The computer. John is still using this one right here. John is still using that. He just had it fixed the other day. I had one of those, believe it or not. All the way through today. There's a mainframe of servers. Computers enter the scene, and nothing will ever be the same. Then the next advancement, of course, it doesn't do a lot of good to have a computer sitting there all by itself. So the next thing that came, of course, was the internet. And enter the vast majority of us who I'm talking to and myself who now could say, wow, there's the internet. I do go back far enough that to day trade, my first 6 months, I had to put a satellite on the roof because the internet was not equipped to push the day trading data fast enough. Very short time. It wasn't even worth putting it on because before I got it up, it was almost good to go on the internet. So then the internet came along. The internet brought, of course, a ton of changes. This is where things really changed because now instead of just end of the day stock quote, oh, what do I want to buy? Now we have all kinds of new things that happen. Self-directed trading was called at one point, meaning you could execute your own stuff. Online investing, it was called, do it online. Day trading came about for the first time because all of a sudden you had quotes of the stock during the day. You had intraday charts. You could buy and sell minutes later. Scalping, just a very fast form of day trading. This little guy here stands for the first opportunity for individual investors to go on the internet and trade, because even when the internet came out, you could maybe send an order in on the internet, but you could not get instant execution. It wasn't until the crash of '87. Anybody know the name of the first execution system that was available for us traders? The first execution system that eliminated the monopoly. Anybody who has been through the intro course would know what it was. Exactly, Gary Sos. Eric, yeah, Sos, Art, Sos, boy, you guys are fast. Small order execution system, that's what the little guy is. First day traders are known as Sos bandits. Anybody know that little guy down there? Another big thing that happened when day trading first came out. Anybody know that little guy down there? That's right. Remember the famous E-Trade baby? E-Trade was just the top broker back then when everybody started trading online. Early 90s, whenever it was. That was before my time, actually. I started in 99, by the way, in case you're the very end of 98, in case you're wondering about me. So all that came around, and that brings us, these are all called, so this is now not so prehistoric advances. And now we get to modern advances, and that's kind of what you're all here for, right? Here are some of the terms that are thrown around. Actually, Eric, amazingly, I have a picture of me that wasn't far from what I look like at all. I mean, I was kind of close to that. That is very close to how I looked, yeah. I did not have that big stack of money behind me, though. That I did not have. So here's some of the terms we're going to talk about. This is a little bit of an education for me, because while I've kind of, grown up with all these terms, if you will, I've had a little bit of a laid off attitude about them. Program trading, arbitrage trading, algorithmic trading, in other words, algos, automated trading software, high frequency trading or high frequency trading machines. A little discrepancy about what that is actually. Artificial intelligence, the new one, AI. That's what you're all here to hear about, right? Bunch of terms. A lot of the distinctions are not even terribly clear, even when you are investigating them and researching them. To the average trader, some of these terms are not terribly clear. I imagine if you actually do one of these for a living, if you're on Wall Street or you're part of a very lucrative type of firm that's involved with some of these things, maybe some of these distinctions are a little clearer to you, but for the most part, some of these terms are very, very much the same. Program trading, the definition. Program trading involves using automated computer programs to buy and sell large quantities of stocks or other financial instruments based on predefined rules and algorithms. So here we have a computer program that's written by a person. Person writes it, puts it in the computer, and the computer executes that. Okay, so that's a little different we'll talk about later. I want to go to the first two or three of these together first because they're kind of similar. The second one is arbitrage trading. Arbitrage trading is just simply a type of program trading. Now, arbitrage trading is a very, very common thing. What arbitrage trading is, by the way, is arbitrage trading, is that a nasty thing? Does that hurt you? Does arbitrage trading hurt you? No, you wouldn't even know what's going on. It's going on all the time. Here's what arbitrage trading is in a nutshell, in the simplest part, and this one I've always been very familiar with. The QQQ is an instrument that's been created by the brokerages, right? And it is the NASDAQ 100 stocks, right? Well, what were to happen if people were buying the QQQ and the 100 NASDAQ stocks did not advance at exactly the same rate? It adds liquidity. It absolutely does. Tons of liquidity. Well, what happens is there are people with billions of dollars, and super fast computers. And what they do is they have a program that's running. And what it does, it takes the price of the QQQ. It adds up all the prices of the NASDAQ 100 stocks. And if this gets to be X off, a penny, I don't know what the number is. What they do is if there's a discrepancy, if these are worth more than that, they will sell 1,000 shares of each of these and buy 1,000 shares of this and pocket that small change. And that's the reason why the QQQ will always move tick for tick for tick with the sum of the NASDAQ stocks. It's why the same thing is done with futures. That's why the futures chart will always look exactly like the chart of the QQQ, the NASDAQ futures, because if there's any discrepancy, it's immediately absorbed for profit by people. There are obviously several people that do this, several firms that do this, so it's very competitive. So I imagine things don't get a fraction of a cent out of place. So that's arbitrage trading, is a type of program trading. By the way, Art, could you do, I'm not trying to be personal here, Art, but could you do arbitrage trading? Art, John, Gary, could one of you guys do that if you wanted to? Set up a little thing in your office and do arbitrage trading? Yeah, no. I don't think anybody listening to me could do this. I'm not sure anybody in the town I live in could do this. Obviously it takes huge money, huge computers, the whole thing. Algorithmic trading. Well, here's a funny thing. Algos, if you didn't know this, is just another name for program trading. Program trading uses algorithms. This is an overreaching term that describes trading strategies executed by computer programs following predefined rules and algorithms. These algorithms may be complex, incorporating mathematical models and even machine learning to analyze market data and make trading decisions. So these first three things are really all the same thing. Algorithmic trading can be done. It is simply program trading, and part of program trading is the whole arbitrage thing. It's all together, right? The questions we're going to want to answer as we go through this are two. Is what I'm talking about, does it hurt you in what you do as an average trader investor? You're the typical day trader and you got $50, $100, $500,000 account that you're day trading, or an investor in your long-term investing. Do any of these things I just described, do they hurt you in some way or not? And the other question is going to be, can you use these to benefit from them? We're going to kind of go through that as we go here. That's the two questions we want to keep in mind as we go through these. Let's continue on. I'll come back and summarize some of the thoughts here. Automatic trading software. Again, while it's sold and packaged as automatic trading software, it really is just software that's using program trading or algorithms, right? Here's an example of automated trading software. Imagine you program a system to automatically buy stock X when the 5-day moving average crosses the 20-day moving average. This is an example of algorithmic trading. You could use the same algorithm to buy and sell large quantities of stock X. It could also be considered program trading. Does any of this sound familiar to you? Does that concept sound familiar to you? Buy when this squiggly line crosses that squiggly line. Yeah, all this is simply just taking those technical indicators, writing them into software, and executing buys and sells based on technical indicators, which, as we already have discussed in many, many, many venues, simply does not work, right? So now we have automated trading software that's going to capture a concept that is useless. But thank you for the automatic trading software. We'll come back to all these a little bit. That's why it says sound familiar question mark, because it's the same discussion we have when we talk about using technical indicators. High frequency trading or high frequency trading machines, it's interesting. If you are bored and want to Google some of the stuff on your own, it's kind of funny. It's very, very difficult to get a definition of an HFT these days. When they first came out, the definition was clear. As a matter of fact, HFTs were typically referred to as HFT machines. The word machine was in there. I put it in earlier because a big part of the HFT was where the machine sat and the speed of the machine. They would actually be able to sometimes intercept and or beat orders, and I don't know how all this works, but they were considered to be somewhat disruptive. But then when you read about them, now it says, well, it's just another type of algorithmic trading, and it's been around since the 1990s or even the 1980s, et cetera. HFT's been around since the 1980s, depending on how you define HFT. But I remember when they came to light, like I didn't think it was as early as 2005, and I'm going from memory, but sometime in the mid-2000s, all of a sudden, HFT was all the talk, right? High frequency trading machines. Oh my gosh, the machines are out there. We'll never be able to trade again. This is ridiculous. So what HFTs did were they just kind of were hyperactive algorithmic trading, and they were specifically, I know at the time, that they were expensive machines that somehow were placed into the system in a very, very pristine spot where they had the ultimate access, so to speak, right? So they could maybe, beat an order in by a millisecond or whatever it was for fractions of cents and that type of thing. Were these the machines that they tried to get as close to the market as possible? Yes, exactly, John, right. Yes, that's what I mean by location, yes. They're in a specific location, yes, physically, right. And I think sometimes being close to the market didn't always mean close to the market. It was close to the whatever hotspot was nearest the market, or, I don't know how this works, but yeah, location was key to these. When you read about it now, you don't really hear that. And I think the reason is because the original uniqueness of HFTs has disappeared because of the competition. It's a very expensive proposition. It's multi millions of dollars to get one going. And I think the competition has kind of drowned these out where they're not as big a deal anymore. When they came on the marketplace, I was aware of them. I'll talk about that more in a minute. And as time went on, they just have disappeared from being something noticeable. Now, HFTs and what they call dark pools, they do the most of the trading in the market. They do 65, 70% of the trading. You wouldn't know that. I wouldn't know that. I really don't care. But they are very prevalent. It's just that they're not out there doing anything that you really care about. So let's continue on. Do I have a comment here? Oh, here's the thing that you read, right? One of the positives of HFTs is what I think Gary mentioned earlier. They provide tremendous liquidity to the market. Liquidity is a huge thing. If you want to get into your stock at 25.25 and get into 25.25 and not have one of the 2,000 shares get into 25.30, liquidity is key. All these things I'm talking about provide liquidity. You know what the negative is about an HFT when you Google it? You know the big negative that stands out about HFT? Anybody want to take a guess what it was? What's the big negative about an HFT? And this is hysterical today, to me. Well, that doesn't bother us. But the negative for people was, no. The negative was that they called it market disruption. And you know why? Because one day, about 10 years ago, I don't think they withdraw liquidity. Or if it is, they're taking out the liquidity they put in, so who cares, right? But remember one day, like 10 or 12 years ago, there was a big market. They called it the flash crash. Anybody remember the flash crash? Yeah, well, that allegedly happened from an HFT debacle, whatever it was. Okay. So that was one day 15 years ago, and that's still what is considered to be the negatives of HFTs, that they caused this crash. Okay. Well, you know what? I remember another time before that where somebody in a firm manually entered an order wrong. Instead of putting 10,000 shares, they put 10 million shares. And it crashed the market also, or at least that stock. I don't remember exactly, right? But we all didn't go into an uproar saying, let's fire every human being because that, right? So, I mean, there's no negative to it in terms of the marketplace other than one time many, many moons ago, it caused a flash crash. It never has since. So, kind of hard to, I remember a Yahoo post back when things were a little easier to manipulate. I think it was almost a kid, made a Yahoo post about some medical stock and it dropped from 80 to $20. Anybody remember that one? I was watching it happen. It turned out to be a hoax and it reopened at $76 or something. That cost some people their whole account, I'm sure. So now to the big one, artificial intelligence. And I'm just kind of defining these. I'm going to come back and talk more about them in just a second. So if you're wondering, hey, I didn't learn a whole lot yet, don't worry. Artificial intelligence, AI. So this is a real simple definition. This is just algorithmic trading. Algorithmic trading and AI trading share the commonality of using automated trading systems for trading, but they differ in their approach and decision making. Algorithmic trading, algos, rely upon predefined rules and mathematical models. So somebody has to program in what algos do. Whereas AI utilizes machine learning to analyze data and make trading decisions independently, learning and adapting its strategies over time. So it's just the AI feature. It's a thing that instead of programming it in and it stays that way until somebody intervenes and reprograms it, now AI has the ability to say, okay, here's my program, but you know what? Maybe I can change it as things develop, right? So think about what that means for a second. So again, two possible facets, right? Somebody else is using AI, and think about what implication that has in the marketplace. Just think about it for a minute. And then maybe you want to use an AI thing because this is something that you can do independently. You can go Google and get AI trading software and use it yourself. So maybe it's something you want to do. Now that we've kind of gone through what they all are and we understand what they are in general, let me take you on my approach of understanding how they affect us and how you could or could not utilize them. Let me say that again. Now that we've gone through and kind of defined and familiarized ourselves with the progression of these modern advances in technology, let me go through and take you on my journey of how I think they either affect us or we could benefit or not benefit from them. So to start off, I'm going to give you a fun little concept here to think about. I want you to imagine that somebody just invented the perfect trading system. He has analyzed all this data and he has been testing it himself and it works 100% of the time flawlessly. I don't want you to even question the fact that it works, all right? Can you just accept that? Accept the fact that this guy, we'll call him Dr. Q, has invented the perfect trading software. It's for day trading, okay? Perfect trading software. You cannot question that it works. It works. It works because he has tried it for whatever time period you want to say. He's been testing it for 3 months on 75 different stocks, and every single stock hit the target it was supposed to hit. So now he has decided to go public with it, right? And he's going to sell it online, right? Hang on everybody, he's going to sell it online. But in order to get everybody sucked in, he's going to give everybody a free sample of it. So he sends out an email and it makes the national news that his program says tomorrow we're going to buy Tesla what's Tesla's price? I don't want to confuse anybody, so let me get a somewhat realistic price here. Tomorrow Tesla is going to drop to $268. And when it drops to 268, you buy it. And then it's going to top out at $273. He's done this 100 times in the last 3 weeks. similar, not same trade, but similar trades, different stocks. This works flawlessly because however he figured it out, he's just incredible. So there's his trade for tomorrow, except he sends it to the entire world. It's even on ABC, NBC, CBS News. So tomorrow, Gary, you get on your computer, anxious to buy this at 268, selling 273. Anybody? How well is this going to work tomorrow? How well is this going to work tomorrow? This is all, I think, very important understanding this whole discussion tonight. Well, there's two choices. Either this is very important in understanding this discussion tonight, or I am one of the stupidest people in the world. And it could be the second one. I'm not going to rule that out. Everybody, how is this going to work? How is this system going to work? It has worked flawlessly for him. Why won't it work? Why can't we all do that tomorrow? But John, I'm a nice person. I'd like everybody to be a winner. Wouldn't that be great if we could all buy it at 268 and then we're all winners that day? Wouldn't that be great? What's wrong with everybody being a winner? Oh, Gary, I'm not sure what zero-sum game means, but are you trying to say that we can't all be winners? Are you trying to say somebody has to be a loser? That doesn't sound very nice. I'd kind of like us all to be winners. I used to joke around about like technical indicators, saying that I'm going to invite 6 of you over to my house and we're going to play poker. And that I have this great new poker game. You're all going to love it because we all end up winners at the end of the day. And it's the same concept, No, can't all be winners. If there's a winner, there's a loser. That's the way it is. That's all. And I want you to think about that as we go through the rest of this. That there is no concept that makes everyone a winner. And if there's a concept that makes you a winner, to the extent that it is noticed and catches on, it self-defeats itself, correct? Correct? In a sense, and this is why systems don't work. Remember that we saw that example of a trading algo you could write yourself, go long when the 5MA crosses the price from 30 days ago, whatever it was, right? Well, that's why that can never work. That's why any purely objective thing can never work, because anything that's purely objective can be duplicated and it self-defeats itself, right? If everybody knows to go long because when the 5MA crosses the Watsumakuzi, if everybody goes to do that, everybody jumps in earlier, everybody sells earlier, and it zeroes itself out. I'm not making this up, right? It's in the concept of common sense, right? Now, so here we go. Look at the title of this next slide. Don't tune out yet. Hear me to the end. It's 5:30. This is so silly. Okay? What's so silly? Here's a trade, the last trade of the week that was posted. Okay? I don't need to go into the details. If you want to go see it, it's on the free stuff page. It's not to show off the trade. It's just to say, here's a 5-minute chart on Marvell. I went long here, and I exited there. Made almost 3 hours in whatever time that is. Okay, obviously it's a trade of the week because it's a nice trade, right? Nice trade, Paul. Here's another trade of the week. This is ESRX. Don't have any numbers on this one. I don't remember the numbers. It broke out right there and got that tremendous pop going up to 46.5. All happened in about 10, 15 minutes. Using the market as a guide to help judge the relative strength, right? Market falling, da-da-da-da-da-da-da. Where would you see this trade though? Because this trade is not on the free stuff page. This trade was actually from back in October. Is the date there? Where's the date? October? Oh, August 8th. August 8th, right? You probably wouldn't see this one on the free stuff page though, because it actually was from, well, let's look at the other trade too. This other trade is short Intel. Short Intel. And the charts are a little small here, but here it kind of lists some of the criteria of why I shorted Intel. 60-minute major resistance, that's the 60-minute chart right here. A 5-minute climactic move, acceleration, big volume, reversal time, retest and failure, shorted Intel, beautiful trade. Do you like these last two trades, everybody? Intel short, ESRX long, you like these two trades? They were from August, and I know I went back a little ways to find these, but actually they're not from August of this year, they're from August of 2014. August of 2014. If you take a look there, you see that was not DTS at that time. This is over 10 years ago. What's my point of this? Why am I showing you a trade of the week from 2 weeks ago and two other charts from 10 years ago? Art, every 10 years, I come up with a good trade and I take pictures of it and I save it. Absolutely. I'm waiting for the year 2034 for my next great trade. Price action remains constant. Technology doesn't change the markets. So you guys just saying that to make me happy, or are there any light bulb moments yet? Because I know this is a big topic for so many people. Really? Really what? Price action remains constant. Yeah. Are there any light bulb moments out there? I mean, everybody seems so interested, and you're here for a reason, and I'm not quite sure what you expect, because to me this is, well, it's interesting. I still have more here. We're going to keep going here, but that's exactly my point, is that last week, 10 years ago, it's the same chart, it's the same concepts, it's the same human behavior, it's the same entry, it's the same exit, it's the same profit. I wouldn't know there's any difference. Well, Myron, that's the old point. That's the first point I made about a lot of the automated stuff, is that there is no one system that could work, right? It's always going to be some art. But my second point here has nothing to do with that. The point here, Myron, is that these trades are from 10 years ago. This trade is from last week. There's absolutely no difference. In other words, where on this chart from WECO, where have I incorporated dealing with HFTs? What have I done to overcome artificial intelligence screwing up my trade? What have I done to do that, everybody? What have I done? How has my trading changed to accommodate this? It's an important question. I mean, if you're here expecting an answer, what have I done that's different than 10 years ago? Absolutely no change. Absolutely none at all. So here's the next, bring it home, Paul. I will. Bring it home, Paul. I might be the stupidest person in the world, and maybe some of you will email me later and explain what I don't know. What I do know is I've been sitting in front of the screen watching the movements of the market in U.S. stocks for most days for a very, very long time. And if I was frozen 20 years ago and woke up today to trade, I would not be doing anything different. I would not even know about these technologies. They don't affect me and never have. But read that paragraph again. And you guys tell me, now there could be a couple of exceptions. Somebody who is, well, I'm not even sure about that. I mean, I could talk about somebody who is super, super micro scalping. You ever seen Ford trade or BAC? It trades to the penny for like 5 minutes and then it moves up a penny. So I don't know how you could tell me that machines are taking your money or algorithms are interfering with what you do. If I was frozen for 20 years and woke up today trading, I would not be doing anything different. I would not even know about these technologies. Think about that. I would not even know about these technologies. They don't affect me and they never have. And I'm not bragging. I'm not complaining. I'm just saying I'm a little lost sometimes when I hear, you get an email occasionally, you hear somebody quoting somebody, and they're complaining about the bots. The bots took my money. And I'm just like, what are you talking about? The bots took your money. I don't understand that. I mean, to me, well, don't let me jump ahead on my slides. Art, keep control of me, or don't let me get ahead. For years, I've been saying, and like for going on 2 decades, I've been saying, show me the technical indicator that works, right? Because people tell me all the time, oh, technical indicators, that's what I use. Show me nobody has ever shown me one that works, but yet people continue to try to use them. Never have I been shown one that works. There is none. Then we had the same thing with bots. You know, oh, you can't trade because the bots are there. And now it's AI. But AI being used to see abnormal whale trades, catch these moments, maybe does not really relevant today. Well, Jack, I'm not saying that an AI person who has the money and is able to do that could make some money doing it, possibly. I'm saying it doesn't affect me at all. If he finds an abnormal whale, it doesn't in any way affect anything I ever do, correct? I'm trading typically the top, let's say the top 500 stocks out there, right? I'm not trading something that just dropped out of the sky and is some medical thing that just cured cancer and is going from 5 cents to $30 in one day. Who knows on those? If you're trading those, that's your issue. But none of this stuff matters. I'm still going to get to the point a little bit about if you want to try and utilize these technologies. By the way, I have the note here. I think it's out of place, but I might forget to say it, so I'm going to make the note here. Keeping in mind what I said about the poker game, keeping in mind what I said about if that guy came out with the Tesla formula for all of us, think about this for a minute. If you think that AI software is that you should try to make money, if you ever think about this, what happens when AI meets AI? Did you ever think about that? I think I discussed that later, but I put that in the notes here. Bottom line it, Paul, some more. When program trading was the thing, I've been running a room and doing education for a long, long time, right? And program trading came out and it's like, oh, we can't compete with this. And I'd be like, people like, what are you competing against? I don't understand. You're not competing against, what is it, if you were to kind of summarize our job as chart readers, technicians, technical analysts, what is kind of like what we try to do? I mean, it's kind of a common phrase out there and one that I do use myself. What do we try and do, basically speaking? Follow the money. Follow the money. We don't, Eric, do we try and battle with big money? Is that something that I'm not familiar with? Yeah. So when people said to me, oh, program training's here, how do we compete with it? Well, we don't compete with it. We follow it. When HFTs took over, let me tell you the story about HFTs. I didn't even know when they came on the scene initially, but here's what would happen, right? There'd be a stock consolidating near the high of the day, one of the strong, nice, beautiful stocks, right? And all of a sudden it would do this, ba-bam. I was like, huh. This guy emails me one day, honest to God email. I tried to save it, but I lost it in the transition of companies a long time ago. And he said, Paul, I know you don't think it's smart to be trading during lunch. And I never really said that, but that's what he said, I said. And he said, here's what I do. Every day lately, I'm in a stock and it starts to break out and I get in the stock. And then it pulls in and then it sits there a while. And then bam, it stops me out. And I get all mad and I walk away. And when I come back, it's way higher. You ready for his next line? Are you ready for this? You sitting down? Make sure support your head on something just in case you pass out. Right? Paul, every day, I get in the stock, it stops me out and ends up higher. You know what he says? He said, what do I do? So what should I do? What should I do? Well, there's three possible answers, right? The F answer would be just stop trading because you're an idiot. The C plus answer would be, all right, well, don't buy that breakout, right? I guess the B minus answer would be wait for this breakout. And the A answer would be is buy what we call now a shakeout. Play with the HFT. Now, I didn't know that for a long time. I didn't know this was an HFT. I don't study this stuff or care. I just knew this happened, right? And not being, let's say I'm not in the lowest 5% of mentality in the world. Since I'm not in the lowest 5%, I realize, because I learned this in a movie called Groundhog's Day, that if the same thing happens every single time, you can learn to make money from it, right? So I guess there's two ways of looking at it, right? I guess one person could say HFTs ruin trading because every single day they do the exact same thing and I can't figure out what to do, right? Or you could say our job as chart readers is things change from time to time. We note the changes, we make money from them, all right? And by the way, this really doesn't happen anymore. It's very rare. I mean, because HFTs are so neutralizing. So we still get shakeouts for various reasons, but it's really not an HFT caused things. HFT got the credit for doing those for a long time. When trading software is all the rage, and again, I've been through all this stuff, as an educator, as a room moderator, Paul, the software came out and man, it's just green light. Remember green light, red light, anybody? Anybody go back that far? Green light, red light? Question, did day traders affect investors when they came on the scene? Another important thought to think about. Back, 20 years ago, whatever, they're just investors. All of a sudden, the door opens up and we have day traders and people that can do self-execution. Did it affect an investor? If you wanted to just once a week come in and buy Intel or something, but if you wanted to buy Intel next Wednesday, did the day traders make that price worse for you? No, because day traders by definition were out the same day, right? So if day traders bought 5 million shares, they had to sell 5 million shares, right? Now, it's possible if you just randomly come in on Wednesday, maybe the day traders made it a little more expensive, maybe they made it a little cheaper. But on average, there's no change in price, right? I want you to think about that as well too, because most of these things we're talking about, these arbitrage things, they're not moving things. Do you understand what I'm saying? I mean, all this arbitrage stuff, all the program trading, a lot of, they're not moving things. They're capitalizing on market discrepancies. So they come in and something's out of balance, right? Something's a little out of balance from here to here. And they go blah, 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 blah. And they fix it. And it's pennies. The same thing was back then. It's like, oh, day traders are ruining everything. Well, no, they don't affect anything. It's the same thing. All these things are capital price inefficiencies. So how does any of this affect us at all? If prices are moving or changing, think of the HFT discussion. What do we do? Do not we follow? Here's another super important paragraph to me. We're almost at the end here. Do not we follow big money? I asked that a minute ago. Does it matter? Think about this. If big money is going long because the boss, think 2 decades ago, the boss said buy 5 million shares, or the board or committee of the firm, right, said buy 5 million shares, or a computer said to do it. What if it was a super advanced or fast computer? Does it matter why somebody's buying 5 million shares? So I'm talking about not in discrepancy, I'm talking about now a real market move. Does it matter why somebody's buying 5 million shares? Yeah, I don't see how it does. I don't understand how it does. How does any of this affect you? We already discussed this. Everyone jumped on the technical indicator bandwagon years ago. Now there are over 1,000 technical indicators that do not work. Trading software hit the scene and still resurfaces from time to time. New companies, new sales. Remember the red bar, green bar thing? Red light, green light? Do you know, it resurfaces every couple of years, right, John? You see software commercials. What happened to the first company? What happened to the first company that made software trading programs you could buy? Like $100 a month, you can rent this. They were sued. Well, whatever happened to them, you think if people made money, we know the name of these companies, right? And they'd be like, wow, I can't wait to get that software in the company. It really works, right? Yeah, it didn't work. So they go away. And then, new group of people come up a few years later. Oh, trading software. All you have to do is red light, green light, and you make money. And it'll keep coming up forever and ever. And there'll be the newbies that try it. And then they'll watch the demonstration and go, oh, wow, this really works. And then it won't work for them. And then they'll tell them that they need the advanced software, blah, 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 blah. And then they give up, right? And then, of course, the worst part of that is that then this person, this newbie, says, oh man, this thing was based on technical analysis. I guess technical analysis doesn't work very well, right? That's right. There's always, Jack, going to be the new system, right? Ultimately, I hear you saying that you have a system that works and you follow as defined, but it makes... Well, Zone, I'm going to call you Zone because I'm not sure how to pronounce your name. There's one big flaw with what your comment said there, and that is the word system. And maybe I'm being picky. But to me, a system is what I described earlier. It's a purely objective concept where you're taking the 20 over the 40. What I use is what I would call a method, meaning that it has structure, but there's always some subjectivity involved. Then yes, I have a structural method that works. And part of that method is to analyze, follow up, see if something has changed in the market, my trading, whatever is naturally we're always looking, bearish versus bullish. But in addition to that, there's times the range is expanding and we can get bigger targets. There's times it's shrinking. There's time that breakouts just aren't working. There's time that pullbacks are the place to be. There's time that you don't short rallies. You just notice things in your toolbox of things that you use, and you always try and pick the best tool for the day, for the week, for the month, whatever it is, right? Yeah, exactly, Pierce. That's where the secret to everything is just what I am saying verbally and you're saying now in type is tracking what you do and just notice if you're doing something wrong or if there's things that have changed, right? Those are the details of the method, yes, right. And the method is just simply having a great understanding of the language of charts. That's all it is understanding how to read a chart, because then you're following what is happening, whatever that may be. Like it says here, it just doesn't matter who's hitting the buy button. I see another question there, but let me just do this next thing. Program trading, go do it. Lobster, I didn't read your question. Let me just get through these couple slides here and I'll take all your questions here. I'm glad you have so many questions, but program trading, go for it. You have the money, time, resources, don't mind the bazillion people you'd be competing against, truly competing in this sense. And I'm talking about if you want to, and again, there is no concept that you're going to write that's going to make money taking your 1, 2, 3, 4, 5,000 shares. The only things where you pick up on market efficiencies are like what I talked about with arbitrage and that type of stuff. And that requires, bazillions of dollars and time and effort and everything else. But that's the only way that these things pick up on inefficiencies. There is no program trading thing that you or I would use. How about AI trading, artificial intelligence trading? Go try it. Let me know how it goes. Now, this just goes back. This is the same discussion I had 15 years ago. Oh, Paul, technical indicators, man. I know there's a couple that really work. I've seen them work. Okay, tell you what. I had several quotes I was going to start using. I decided I'm not going to do this. You go Google AI trading yourself. Okay. If AI trading is something you can do, there are you just Google I want to AI trade, and there's all kinds of brokers and firms that'll have AI trading software for you where you just light it up and let it go pretty much. And you tell me which one makes money, because you now have AI competing against AI. So who are you going to pick? And if that AI one that you have happened to work for that week, won't the other AI models pick up on that? And all of these are at a very minute level. I mean, none of this AI trading is going to change where an hourly chart or a 5-minute chart goes, because what we want to follow is the actual money that's coming in the market. See, there's money coming in or leaving, right? That's what we care about as traders, at least to the 99% of you I'm talking to, right? Big money coming in or big money leaving, right? And then all along the way, there's little money just bantering back and forth. Inefficiencies. AI says up 5 cents and sell it. Other AI says down 4 cents and buy it. I don't even see that or care about it, Now, I'm not saying stuff doesn't happen. Stuff happens. I mean, but it always has. I had the quickest stop out of my lifetime yesterday. Quickest stop out of my lifetime. Those in the room know what it was. I shorted Ford, and it was sitting there. I think that the trigger was under 0.09, and it was sitting there trading. The bid was 0.09, 0.09, 0.09. Hadn't got any yet, right? The bid dropped to 0.08, right? I think my shares filled. Ford trades millions of shares every 5 minutes. I think my shares filled, and maybe it stayed there for 2 seconds, and then some news came out about tariffs, and Ford shot up 20 cents in a minute. What do you do about that? Well, nothing. It's news came out, everybody bought it. That's always been something you deal with, right? Just nothing. So I'm not saying stuff doesn't happen sometimes. I'm just saying there's just absolutely nothing in my mind to know, understand, or learn about any of this stuff. And the proof can't be clearer than what I just said. Here's a trade from last week. Here's a trade from 10 years ago. I don't do anything different. There is no difference. There's nothing going on. I don't even see or understand what people are talking about, to be honest with you. Let me get to this almost last slide here. Oh, when you Google this, very important. I will get to when you Google this. I want you to see. It says discussion my stovetop. All right, you want to hear the stovetop discussion? Nothing more frustrating. I don't go online a whole lot. I don't like it, but when I want to find out information, I go online. Do you want to hear this discussion? Do you want to hear the stovetop thing? It's actually kind of funny. All right, I'm gonna get something to drink. I want somebody to say they want to hear stovetop, or I'll just go on and skip the whole discussion, even though it probably is the secret to trading. Stovetop, there you go, thank you. So a few years ago, my wife was cooking something on a ceramic stovetop, and she took a piece of tinfoil off of whatever she was cooking. Anybody ever do this? And that set a pot down and caught a corner of the aluminum foil. Anybody ever do that? Well, the aluminum foil welds itself to the stovetop. I mean, it welds itself. So, okay, so there's this kind of black thing stuck on top of the stovetop. It was black, silver, I don't remember. And you couldn't get it off. I was scraping it, scouring, all this different stuff. So I Google it, right? And like anything on the internet, everything's out there. It was a common problem, right? So I'm reading and reading and reading. And I said, oh, yeah, that happened to me. And this guy goes, yeah, well, try using the kitchen cleanser, blah, blah, blah. Another guy, yeah, well, here's what you do. Use SOS, blah, 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 blah. And there's like 7 suggestions. And not me, but this other guy goes, have any of you given the suggestions, do any of these suggestions work? And everybody answers back, oh, no, that's never happened to me. I just thought I'd give you an idea. Is that frustrating? Seriously. I mean, so the bottom line, there is no way to fix that. There is no way. If that happens to you, you have to get a new stovetop. There's no way to fix it. It's not possible. It literally welds to the top, and it cannot come off. But everybody's giving their opinion. And the reason I bring that up is because right here, if you go Google make money with AI trading, You know what? You have a lot of people. Here's what everybody says. All you have to do is you write your own algorithm and test it for a while, and then you make money. Oh, well, did you ever do that, sir? Oh, no, I didn't. But that's all you have to do. See, that's what you get a lot of, is everybody giving their opinion on what they think works or doesn't work. So if you really drill down and try to get to the people who have done it, tried it, tested, whatever, you're going to find, no surprise to you, just like automated software, just like technical indicators, just like everything else, there's nothing there, right? And I want to point out again, if there was, guess what? I would try to use it, right? I just want to make money. I don't care how, if that was part of what I do. Here's an answer. And again, I didn't want to start quoting all kinds of things from the internet, but there's this one guy that I think sums it up. A guy who spent a year testing out program trading AI software. And the bottom line is that, yes, it can work, but the caveat is it's both exceedingly rare to be successful and exceedingly difficult. Okay. I guess there's a lot of things that are successful that are exceedingly rare and exceedingly difficult. So I encourage you, and I encourage you to send to me if you find some success with any kind of AI thing going on, because there's not. And I've heard already from at least a dozen people in email that have talked to me, and they're kind of newer and they're thinking about getting educated, they're thinking about this, they're thinking about that, and said, hey, AI, I have this platform. And there's a guy that emailed me that wanted to know what is the right platform to download to just make money and walk away. And of course, I gave him a common sense answer, and I never heard back from him and never will, because he's going to keep trying out things until he loses enough money to figure out it's not going to work. So let me go back. And the first question is a very long one here from Lobster. How much money is there in 401k saving accounts today? $44 trillion. How much of that is floating in the market today? All that is stagnant money in the market. How much money is coming in the markets daily? That is nothing today. Big picture, yeah. Yeah, Lobster. Big picture, you have the right attitude. You know what's funny, Lobster? I remember my second year of trading. So we're talking like 2000. And I remember somebody coming on doing something that I thought made a lot of sense. And what he was going to just track flow of funds to the nickel. Every penny coming in, you couldn't do it though. It can't be done. But obviously that'd be the thing to really find out how to make money, is how much money is coming into all these funds, how much money is going out. Can't do it, can't find the numbers, whatever it is. But theoretically, that'd be the thing to do. But you're right. It's the big money that makes things move, even intraday. Not 2 pennies, but any kind of moves that most people are trying to capture. The only requirement is that we have a free market. That's right. That's right. And we do have a free market. As long as we have charts, Zone, as long as we have charts that represent the prices that are printed, that's all I care about. Then nothing is rigged, nothing is a cheat, everything's fine. It is not possible to teach AI the language of charts. I do not believe. It's a long discussion, but I don't believe. If it is possible, theoretically, I don't think anyone could do it, if that is a sensible statement I just said. Our brain digests so many variables, and I know in one sense AI is way smarter in terms of computation, but it's not as smart in the artistic sense. I think it's like teaching AI to paint a Picasso and then tell it to go paint something else. I don't think it can duplicate what an artist would do. Not that that's a great example for the point I'm trying to make, but maybe it gets it across. Speculation, yeah. Not even speculation, just random comments. Actually, you know what I heard from somebody who would know is that the best AI to ask questions to is from X, Twitter, Grok. Thank you, exactly. That's Twitter's, right? Eric, Grok. It's Grok. Grok is absolutely the answer, correct. But that's from Twitter? That's Twitter's AI? Yes? But Grok is definitely the answer. It is. It's Musk's. Grok's is X, Twitter, Elon Musk. Yes, that is it. Yeah. Yeah, I've heard that is the absolute best one to use. I've just been dabbling in that myself recently. Oh, am I done yet? Bottom line, Paul, you are missing the beauty of charts. None of this matters. In other words, I made this point 32 times, right? That if prices are going to move, if something's coming in, either there's this minutia battle going on to pick up inefficiencies that you and I are never going to care about or notice, or our strategies, our entry points, will understand them to not get trapped by anything. And number two, any larger moves, we don't care what's causing them. Doesn't matter. And nothing has changed to me. There's nothing different, nothing new, not in the last week, not in the last 2 months, not in the last year, 5 years, 10 years. It's all the same. Yeah, but Roy, remember my other points is that even if it gets good input instruction, what if other AI has good input instruction? Aren't we kind of back to my poker game where things are only as good? Well, with AI self-learning, I think it's all just a moot point. We want to pick up on those big, we want to pick up on those big, not big moves. We want to pick up on the real moves that are coming from real money because some fund, they have to, decides they have to buy 5 million shares of XYZ. That's what we want to pick up on. And I don't care if you're, even if you are a small day trader, like you're just trying to get smaller profits on of a 1 or a 2 minute chart, it doesn't matter. It doesn't change anything. Like I said, even if you're scalping Ford for pennies, none of this matters. Watch Ford one day. I mean, it doesn't get moved by anything. Neither would BAC, any of these things. So if you're scalping, this stuff doesn't affect you at all. If you're normal, what I would call normal day trading for 20-minute, 1 hour, half day moves. See you, Gary. I'm done anyhow. Good timing. If Gary has to go, we're done. Any questions, comments? If you don't want to make a comment here, I'm certainly free to entertain any email. I don't know how else to say what I said. I hope it's been helpful to you for whatever it's worth, or if you don't completely agree, that it gives you something to think about moving forward. You've got a new stove, Art. You know why? Stovetop is a third the price of the stove. New stovetop is like $280. That was a few years ago. Yeah. Thanks, Myron. See ya. All right, buddy. If you're in the trading room, see you in the morning. If not, if you're in seminar program, see you Saturday for Mastering Gaps. Otherwise, I'll see you at the next free event, whenever that is.